All right, so those are all the top stories. We take a look at how the Asian markets are faring before we start for trade on our own bourses. Asia starts muted following a lower close coming in from Wall Street. The Dow was dragged lower by about 80 points by Boeing, which is its key weighted index. The Nikkei, off the highs, had opened mildly in the green and now sitting mildly in the red as we speak. Similar as the fate for the Korean index, the Kospi as well, sitting with about 0.1% in the red territory. At the same time, we have the Taiwanese as well as the Straits indices absolutely flat as we speak. So not too much in terms of either way for all the Asian markets, slightly muted if you must. The SGX Nifty, with regard to that, is a mild outperformer if you must, about 7-8 points in the green. But it'll be very interesting to see how we pan out from here, primarily given the fact that oil prices, they are at $71 per barrel.
Okay, so Asia trades mixed, and that is because the Wall Street also started the week with an 80-point decline in Dow, and that was led by Boeing. Investors are also tracking earnings that will start trickling in soon. The first quarter is expected to be a tough one for corporate America. CNBC's Aditi Roy gets us a wrap of all the action on Wall Street.
U.S. stocks finishing mixed, the Dow falling 83 points, the S&P up 3, and the Nasdaq gaining 15. Shares of Boeing dropping 4% as the market reacts to the Friday announcement that the company is suspending production of the MAX 8. The issues facing the MAX 8 since the fatal accident on March 10th have spread to airlines like Southwest and American that have grounded the planes. Shares of Sony surging on a report that hedge fund Third Point is building a stake in the electronics company, with plans to lobby for changes. This is the second time in the past 6 years the firm has targeted Sony. In recent years, the Japanese electronic maker's influence has lagged competitors like Apple and Samsung. According to a new survey, teenagers are spending $2,600 annually on food and clothing, favoring retailers Lululemon, Ulta, Vans, and Chipotle. The survey conducted by Piper Jaffray also found that half of teenagers view Amazon as their favorite site. That's the action from the U.S. market. Back to you in Mumbai.
Okay, so that's positive news for discretionary spend in US. But moving on, Allianz Chief Economic Advisor Mohammad Al-Arian speaks to CNBC on whether he expects a recession in the future. Says investors can expect to hear of a lot of weakness abroad as well.
The labor market remains very strong. It tells you the consumer is going to continue to power this economy about 2.5% to 3%. That's what the disappointing part about last week's employment report wasn't as much wage growth, which a lot of people focused on. It was the fall in the labor participation rate. What we really need is better demand and better supply. We're getting the demand side. The supply side is not responding as much. So keep an eye on labor participation. That's going to be key going forward. What set of experience and expertise do you want on the Fed? And what they're missing most, I think, is what President Trump called the feel for the market. People who have a good feel for the market. And neither of the nominees brings that. So these are the two issues. But I can tell you that the markets so far are really relaxed. They shouldn't be, but they're really relaxed about this issue. I think they're relaxed for a couple of reasons. One is they don't think inflation is a problem. So they don't think that interfering with central bank independence is an issue. Second, this sort of interference is good for them because the political process is asking the Fed to put in more liquidity, cut interest rates by 50 basis points, restart QE. That's music in the short term to the market's ear. So I think they're not focusing on it, but they should, because longer term, this can be an issue.
All right, and across the Atlantic, European markets too ended lower, taking cues coming in from Wall Street, as here too investors are bracing for a muted or a tough earnings season. Banking stocks, they were the worst performer, while some of the economic data coming in, German imports and exports, they fell more than expected in February. This data came in Friday post markets. Markets also focused on Brexit developments ahead of the April 12th deadline. In terms of individual stocks, we had Commerzbank and Deutsche Bank as the merger talks are underway. Both of them were under pressure. And Henkel, on the other hand, he was at the top of the European index as the CEO guided for positive growth in or gave a brighter outlook for 2019. So the European markets mildly lower, by and large mixed. It was the DAX which was underperforming because of Deutsche Bank and Commerzbank's underperformance.
Okay, so mixed cues coming in from the European equity markets, but let's talk about the big overhang on the Indian market, and that headline is coming from the world of commodities. Crude oil prices hit a fresh 5-month high. Violence in Libya, OPEC-led cuts, as well as US sanctions against Iran and Venezuela are leading to tighter global supply, and that's the reason the Brent is holding above the $71 per barrel mark.
In the currency space, the dollar sags as commodity currencies draw support from crude. Oil surge weak. US data also weigh on the currency.